The July 2025 housing market stats are in. These are the positive trends you need to know as optimism finally returns. My name is Nico James-Bock, and I am a broker at Keller Williams Co-Elevation Realty in Toronto. Also founder of the CondoWiz group. In this new episode of helping you build wealth through real estate, brick by brick, I'm going to go through some of the salient features of the July 2025 market stats, where things are headed, and what it means for buyers, sellers, and investors. We left July on a high note, and as we are in the second week of August, that trend is continuing. For July, the TRREB Toronto sales are up 35.5% since March. That's significant. Transactions too are up 11.2% since March year over year. GTA activity is rising, but still below historical levels. Historical highs. National sales are up 3.8% month over month in July. And it is the fourth consecutive monthly gain, which is noteworthy. We've seen gains since April, May, June. Now we're seeing gains also in July, which bodes well as we head out of summer and into the fall market. What the economists are saying, the post-inflation pickup has finally arrived. GTA average house price is $1,051,719. That is a slight 5.5% decrease year over year. But then again, we are in a summer market, so fairly normal. The national benchmark is $688,700. That is all housing types, including condominiums. Now, this is a slight decline, too, of 3.4% year over year, but it's a smaller decline from the stats that we saw in June. Prices are stabilizing and affordability is improving. 6,100 sales in July alone, which is a 10.9% increase year over year. So if we look back at July 2024 to July 2025, that is significant because we're still dealing with a summer market. We're still in the summer. And having a 10.9% increase year over year is telling. It's very, very telling. 17,613 listings. That too is up 5.7% year over year. There's more activity, more sales, more buyer interest. So a lot of the buyers that were sitting on the sidelines leading right up to April, May of this year are starting to get off. They're starting to listen. They're starting to pay attention. Those savvy buyers that are taking advantage of those opportunities, those sneaky little opportunities that are existing in the marketplace, brought to their attention by their realtor, are benefiting. And I encourage every single buyer to be very, very active, to know what's going on. Sales growth, increasing listings growth leads to tighter market conditions. So enjoy them while they last. Sales to new listings ratio is 52%, which is up from 50.1% in June. National inventory, we are at 4.4 months of inventory nationwide. So it's below the long-term average of inventory as sales continue to pick up. But still, we are heading in the correct direction, which is leaning gradually towards a more balanced market. We were very, very heavily in buyer's market territory as we entered into 2025. In some pockets, particularly in the condo sector, we are still leaning towards favoring buyers, but we are overall tending towards a balanced market. So where neither the buyer nor the seller has the upper hand, and both can benefit by the current conditions. Based on one standard deviation above and below that long-term average, a seller's market would be below 3 to 3.5 months of inventory, whereas a buyer's market would be above 5.5 to 6 months of inventory. We're standing nationally at 4.4 months of inventory. So that is good news for those that are selling and for those that are buying. The TRREB perspective. TRREB President Alekia Barry Spruill says affordability is improving, but more rate relief is needed. Chief TRREB market analyst Jason Mercer says housing can drive growth. Further cuts would boost jobs. So that too would help the economy and help the sales go in the upward direction as we head into the fall market. TRREB CEO John D. Michele clarifies that foreign buyer exemptions, multi-unit land and recreational properties are needed. Bank of Canada. The last Bank of Canada rate announcement was on Wednesday, July the 30th. It was an interesting fact that during that announcement, they decided on another rate hold. So the rate held at 2.75%, and that is the third hold after 7 consecutive cuts. Inflation is near 2%, and it's underlying the 2.5% number that the bank is looking for. Unemployment is 6.9%, which is still fairly high, but trending downwards and at a more reasonable level, down from the 8% levels that we saw towards the end of 2024, all throughout the middle of 2024, the end of 2024, and heading into 2025. Cautious, but there is room for one more cut in 2025. And that would bring us down to 2.5% or 2.25%, depending on how big the cut is, by year's end. The Canadian dollar is stronger and long-term rates are heading downwards. GDP, second quarter at 0.8%. Third quarter was at 0.3%, and 2025 growth is 1.2%, which is also healthy. The next rate announcement by the Bank of Canada is on Wednesday, September the 17th. Key takeaways from the July 2025 market stats. Housing rebound is clearly underway nationally and in the GTA. We're seeing across the nation from BC through to Alberta, Ontario, Quebec, and the Maritime provinces that the housing rebound is clearly underway. We are rebounding from the stagnation that we experienced as a result of years of historically high, or let's say, uncharacteristically high interest rates for an extended period of time as we exited the pandemic. Affordability is improving and prices are stabilizing. So there's no more rapid increases or rapid declines that we saw happening throughout 2024. Prices are stabilizing, which is good news for both sellers, buyers, and investors. Market balance tightening as sales outpace listings for the first time in a long time. The BOC is cautious, but another rate cut is possible in 2025. Not guaranteed, but possible. There were 202,500 properties listed nationally in July, which is up 10.1% year over year. So that's a clear indication that there's more movement, there's more activity. It's in line with long-term averages. CREA chair says that buyers are returning ahead of the fall surge. Remember, September is the start. August 15th is the unofficial start of the fall market. We are just past that now and heading into that territory. We are still in summer, but buyers are now returning ahead of the fall surge. The fall surge typically occurs in October when the fall market is at its height. And that's when things start to take a turn in terms of prices, where prices start to move upwards more quickly as opposed to the gradual increase that we're seeing now. So buyers are taking note and trying to get ahead of that. So what does this mean for not only buyers, but sellers? So buyers are seeing more affordability, but competition is rising as more buyers get off the sidelines and into the market. So we're going to see, as we go into the fall, more multiple offer situations, which were few and far between leading into the summer. Sellers, conditions are tightening. You have to be very, very careful with pricing, with staging, and with the general condition of your property. There are better prospects ahead as more buyers get off of the sidelines and view properties. So you want to make sure that you are the prettiest belle at the ball, because there are fewer homes for sale with respect to number of buyers. So conditions are tightening, and you'll see more activity at your doorstep. For investors, momentum and potential rate cuts make late 2025 and early 2026 much more attractive. Investors, too, were staying on the sidelines, retreating as they were faced with mortgage renewals, high mortgage rates, and a decline in tenant activity. They were offering much more incentives, many incentives, in fact, to get those tenants back into their properties. So that will continue. Rents have come down. That too is temporary. As we move into the fall market, we're going to see those prices too start to level off and increase. Bottom line, the housing recovery is gaining traction. That wraps up another episode of helping you build wealth through real estate brick by brick. Remember, information is power, especially when it comes to your future in real estate. Those in the industry are cautiously optimistic that these trends will continue. I, for one, have my fingers crossed. Hopefully, these trends will continue as we move into the fall market. The winter market is actually the slowest. I have a feeling, however, that this winter market too will be a little bit more active. There will be the necessary slowdown as we are deep in the actual holiday season, but starting in the first week of January, we're going to see more that activity pick up again where it left off from the fall. And as we head into the spring market, which is the busiest market of the year, that is going to be a something to watch. A lot will depend, however, on decisions made south of the border. The US president is still the puppet master as it comes to a lot of the decisions that are being made, even locally. However, we are holding our own, and the decisions that our leaders are making are helping spur on this activity and helping to strengthen our market. If you found this information useful, then please like this podcast and or leave a comment. I'm interested to know what you think of where things stand, how you are feeling about the current market. What are your plans as we move into the fall? And please share this episode with anyone who may find the content useful. That's it for now.